Hey everyone, this is Kirk here again at Option Alpha, and I wanted to go over calendar spreads and setting up calendar spreads here in this quick video. So I'm on my Thinkorswim platform here, and I'm also under the Analyze tab right now. We're just going to look at a simulated trade here under the Qs or the QQQ. So I have the Qs brought up, and you can see here, like I've said in the post above, that a calendar spread is created to take advantage of short-term time decay. So you want to create the spread around the market, wherever market or security you're trading, and you want to take advantage of the earlier or front month time decay of options. So you're going to buy a longer term option or a option with an expiration a couple months out, and you're going to sell a shorter term option, and you want that option on the shorter term to decay faster, leaving a profit. So what we're going to do here is we're going to look at a May 2011 and a June 2011 calendar spread. So I'll just open up both the May and the June options here, and you can see I'm working on the call side on the left. And what I'm going to do is I'm going to buy the June 56 call for 180, and I'll just say that our average price we're going to get for those is 180. And then I'm going to sell the front month option, which is the May 2011 option, and I'm going to sell that one for, let's say, 130 is the average price that we're going to get. So again, this is creating a very basic calendar spread around 56. So I'm using the same strike price for both expiration months, buying the longer term expiration month, which is June, which has 60 days left, and selling the shorter term expiration month, which is May, which only has 32 days left. So then I go up here to my risk profile, and you can see that we have the same profit loss diagram that I've already shown you above in the post. Now for this particular trade, it's going to cost us $50 to enter this trade. Again, we're now buying one option for 180 and selling one option for 130. So we're shoving out $180 and then getting back about $130. So it's going to cost us $50 to enter this particular option. Now, of course, what we want to have happen is this May 2011 56 call. We want this to decay in time faster than our June 2000 call for 56 strike. And what that's going to do is leave a bigger profit. So let's say actually that the May 2011 call, it's about 15 days later or so, and that this particular option is now worth 40, whereas this June 2011 call is now worth, let's say, 120. So now this is going to leave about a 60-cent premium between the two different, or I'm sorry, about an 80-cent premium between the two different spreads. So we bought it for 50 and now it's worth 80. So that's basically what you want to do. Again, you have a very short window with calendar spreads. You want to take advantage of just the time decay feature of the options, and you want to trade right around the market. So you're not hoping that the stock or security will trade higher or lower. You just want it to trade sideways with as minimal volatility as possible. Now, I do want to show you one really cool feature that Thinkorswim does have for those of you out there, and that's the ability to choose the actual spread. So you can see up here I've chosen just the single spreads, and I've built this calendar spread just basically how you would build any. But what you can do in Thinkorswim is click this drop down box and actually go down here to a calendar spread, and that will create the calendar spread exactly for you, and then you don't have to build each leg individually. So I'm just going to click here calendar, and then you can see that it already has the different months put together. So in this particular instance, it will already conjoin or put together the May 2011, June 2011 options, again 32 days and 60 days. And you can see here that the 56 options, and if we just buy these options here, you can see that the average price is right around where we talked about at $50. And again, it gives the exact same payoff diagram. It's just very, very easy to use on the Thinkorswim platform here to go back and forth between these calendar spreads. You don't have to build them each leg at a time. You can just simply use this option right here to build these calendar spreads. As always, I hope you guys enjoy this video, and happy trading.